MCX IPF presents Simplifying Commodities, Futures, Options and Indices.
Commodities performed well in 2021, outperforming various other asset classes, proving their value as pent-up demand led to multi-year high prices in many commodities. It also was a volatile year as rally in energy fueled inflation and precious metals retreated after a bullish 2020. Crude oil prices in 2021 came back from historic 2020 April negative crude to trade in mid-70s. Natural gas market prices hit all-time highs in Europe and Asia, multi-year highs in US as markets remain tight and major supplies are still at capacity. Coal prices gained more than 100% as the power shortage continued a concern. Industrial metals put in yet another year of gains on back of strong demand. Copper made record highs this year and is closing with 24% gains. Zinc and nickel reacted to production curbs on high energy costs. So did aluminum, which outperforms the sector with 43% gains. The sector which did not react to inflation concerns and COVID uncertainty was precious metals. Gold is closing this year down 4.5% and silver is weak by 13%. Blame it on dollar strength, competition from crypto, but the positive here was the lower level gold saw buying. Analysts warn that 2022 will be a difficult year for commodities with the pandemic impact on economic activity set to influence trading. Important development would be the global central bank's tightening policy. The energy transition push would also keep the metal supported, while the energy prices would yet again decide the cost of production. Mining companies are being forced to align capital spending with their emission production pledges, and activist and institutional investors sometimes are demanding sale of entire fossil fuel portfolios. The energy transition is driving the next commodity supercycle with immense prospects for technology, manufacturers, energy traders and investors. Global transition will require $173 trillion in energy supply and infra investment by 2050. But nowhere is the outlook brighter than the metals industry. Clean energy technologies require more metals than their fossil fuel-based counterparts. Key downside risks include the biggest wildcard on how governments will continue to manage COVID and whether the pandemic will lead to more severe restrictions. The other major driver of commodities next year will be China's government policies in containing the virus, procuring commodities, and managing the property crisis. So the commodity volatility is expected to continue. Are you hedging?
MCX IPF presents Simplifying Commodities, Futures, Options and Indices.
Brought to you by MCX IPF.